Good evening, Strategical for community members. We are up for yet another super interesting session wherein you will be learning a lot of important things and how to take decisions during the most uncertain times. So, the thumbnail says this phase destroys money. Most investors won't survive it. So, we'll be discussing on that point. So, before going forward, let me just share that Symposium 2026 is happening in Mumbai on 25th of January 2026 on Sunday at Novotel near Mumbai International Airport. And Strategic Alpha Symposium is an annual offline event which helps the community members to connect with other like-minded investors. It's an event which builds conviction on taking investing as a serious business and be on the path of fortune creation. So 21 days to go, and the topic of this year's symposium is commodity bull run. So, if you believe that commodity bull run is here and you want to take commodity bull run seriously, then this is a event not to be missed. For Strategic Alpha community members, this is a event not to be missed. So I'll be sharing the link in VIP access. I also shared it on Telegram also and Twitter. Do go through that. Do register. 21 days to go. So disclaimer, let me just share that Strategic Alpha and Suyog Dhawan are not SEBI registered investment advisors. Content provided is purely from an educational purpose and should not be constructed as a financial or investment advice. Viewers are encouraged to conduct their own research or consult with a SEBI registered investment professional before taking any investment decisions. So this is the agenda for today, how to take crucial capital saving decisions during the most uncertain times. That is the topic for today. Then we'll take you through weekly roundup. Then I'll be taking you through Nifty 500s and small cap index update, overall market update, metal index update, precious metal update, US market versus Indian market, which one will outperform, market breadth indicators, what are they saying, and Nifty Auto Index, what is the development? Along with that, we'll also look at Nifty Metal Index. And at last, we'll be looking at crypto update. So I'll be sharing three case studies and one live ongoing case study. How to take decisions during the most uncertain times, especially in the stocks. So this is first case study is about Gitanjali Gems. So Gitanjali Gems, I had invested into it around here, and I was expecting it to become a multi-bagger. But as I always say, that nothing great happens below 30-week moving average. And the stock had went below 30-week moving average before the big development happened. And what was that big development? The big development was Nirav Modi was somewhere connected with Gitanjali Gems promoter. And when the price went down below 30-week moving average, I was cautious what exactly is happening. And during the same time, one news came out that Nirav Modi did a scam of around 10,000 crores and he flew out of the country. And during the same time, when I Googled and researched about it was very clear that Nirav Modi and Mehul Choksi, the promoter of Gitanjali Gems, were somewhere connected. But at the same time, uh, on 30th January 2028, my average price was around 70 rupees. And The price was around 60, 65. Here it is wrongly mentioned as 30. And management came on TV and said that everything is right and there is no connection with Nirav Modi. But when understand that whenever the stock price is below 30-week moving average and some negative thing happens, the stock collapses big time. And it was very clear. And I took a exit decision when it was clear to me that there is some connection between Nirav Modi and Mehul Choksi, the promoter of Gitanjali Gems. And looking at the price action and all, I just did the risk management. And what happened after that? After that, it was also clear that Mehul Choksi also ran out of country, and there were several lower circuits which happened. In fact, I told my friend who was also invested into Gitanjali Gems, I just told him that I am just exiting this stock, not interested into it because some or the other thing might come out when there is some connection between Nirav Modi and this, where management himself is saying that there is no connection, but my analysis says different, and I have exited my stock. And he was emotional about that stock somewhere because he was sitting on some 10-15% loss and he didn't exit. In fact, I told him that I have exited and I am seeing that big trouble can come out, and I'm respecting the risk management. So he didn't listen to it, and some point of time later, when the news came out that along with Nirav Modi, Mehul Choksi also ran out of the country. And before even he ran out of the country, there was some development from the banks because Gitanjali James had around 7,000 crore of loans as a working capital. And bank came out and said that we are stopping this working capital facility for Gitanjali James. And working capital is like a oxygen to any company. And whenever that working capital is freezed, a business cannot survive for more than many days, means few days. That was very clear. But I had already exited the position, and after that, the news came. But still, my friend had still invested into it, saying that no, this company has a lot of inventory and all. But he failed to understand that working capital is like oxygen. I repeatedly told him that this is not a good situation, and he kept on holding to it. The stock went on to touch 1 rupees. It first touched 2 rupees. So the big value erosion would have uh, avoided when there was some fishy going on and when the stock was below 30-week moving average. So it was here the need was a strict risk management to exit the stock. So was one case study. And the thumbnail, as I said, that most investors are not able to take such decisions, and that is where they get stuck. So Gitanjali Gems was one of the case where whenever the price goes below 30-week moving average, and when something fishy you are sensing, you just need to exit that stock without thinking much because price action is everything. Price action is like the collective wisdom of the markets, and some or the other people in the markets who are closer to the organization, maybe the insiders and closer people take the action first, and because of that the price action happens. So bhav bhagwan che, that is the well said and well respected term, gets into play during these inflection points where there is a battle for survival, and that survival doesn't happen if the negative development happens. So Gitanjali Gems was one case study where I saved out of a big trouble and was able to exit just before the big trouble happened. Now later on, once let us see one more case study. It is about Rupa and Company. So I was invested in Rupa and Company at around 460 rupees. Because when it was trading about 30-week moving average, that is when I was invested into it. And in fact, some of the smartest of the smart investors, like Sunil Singhania, I think he is even invested today. So at that point of time, there were a lot of developments, like in a way that Rupa and Company was projected to become the next page industries, and all these narratives were there. And looking at those narratives, and even the company was moving in the same direction, taking all those decisions to become like page industries in India, because they had launched products like FCUK, and which were the products closer to the quality of jockey. And there were a lot of things which could have made this a company like Page Industries. But looking at that thesis only, I had invested into it. But the price moved below 30-week moving average. And after that, it also broke the long-term support. So there was long-term support at around 380 rupees, 81 rupees. When this big candle price action happened without thinking much, because not only this, along with it, there was a development which happened is when CFO exited. So CFO was also exited from this company. He took a resignation, and the price action was that it was breaking long-term moving average, long-term support, and the price action was telling well in advance there is something wrong with the company. So I exited around 380 rupees. The stock was below 30-week moving average already, and the price action was negative. I just exited, taking a loss, invested at around 460 and exited around 380. Once again, few of the investors, when I said that I have exited this stock, uh, few people were still commenting about it, that this is a good company, low valuations, and all those. But just see what happened with this stock after that. I think even Sunil Singhania didn't exit during that time, so he had to face a lot of loss just because of this negative development. And after that, the financials never improved for Rupa and Company, and it kept on becoming bad. The stock went down from 300 to first as low as 200 rupees, and now it is trading at 160 rupees. So that is the reason why it is important to understand the risk management even in your long-term holdings, and why price action can help you to take judgmental decisions. These judgmental decisions are very much important. When you got this signal that CFO has exited and there is a negative price action which has happened, it means that risk management is paramount than any story which is getting developed around it, any positives and all, because at this point of time, the risk management is much more important, even in the long term holdings. Just see what happened. So, if one has exited during this time, taking a loss, not emotionally attaching to any company, he would have saved from a big loss. This was one more case study. Now let us look at one more case study. This is case study which all these three case studies I was invested into it, and I was able to take the exit much before the negative development happened. So friends who know me, that I was also invested into Leel Electricals. So Leel Electricals was a company which was producing Lloyd ACs. Now that brand is owned by Havels. So Lloyd ACs, and it was also having a unit of HVAC systems. And this company had sold its Lloyd AC business to Havels, and that they got around 1,000 crore of cash. So, and the market cap of the company was around 1,000 crores. So net, it was a cash arbitrage. And that is the reason why I took this decision to buy Lil Electricals. Even below, the stock was below 30-week moving average, I looked at this long-term support and I bought it around 190 rupees. Invested at around 190 rupees, looking at the long-term support with the thesis of cash arbitrage. Because uh, 1000 crore of cash they would have got, and the market cap was 1000 crore. But after that, what happened was a big price action happened. Nobody on in the means nobody were knowing. People were not understanding what exactly is happening with this stock, because even after the positive development of they selling the brand at 1000 crores, still there was a negative price action. So after this negative price action, because at that point of time, even after this negative price action which happened, people were heavily confused why this stock is going down when the positive development has already happened, when the 1000 crore of cash has received in the bank. They will be receiving that in the bank. It will turn debt free company, and it was a cash arbitrage. Then why the price action is negative? Most people were not able to understand. But I took a exit from this Leel Electricals when it broke this long-term support. And I exited around 165 rupees when the long-term support got broken, where my risk management was triggered. And look what happened after that. After that, it was clear that even after that, the stock was continuously going down. At this point of time, at 110 rupees, the reality came out that promoters siphoned off the money which was received to them after selling the Lloyd's AC to Havells brand, and that money didn't came to the company. So the promoter siphoned off that fund. Even the greatest of the great investors like Porinju Veliath, he was invested into this stock. Around 10% of the company he was owning. And he was not able to exit. And he didn't take a exit, in fact. And all those litigations and all those things happened. But the stock went to zero. So this again tells you the importance of risk management when the price action is negative, and when there is something fishy, uh, that is saving your capital is at most important. Now let us look at now the case study which is going on live, but I'm not sure, means as of now the stock is not yet below 30-week moving average, but so I'll not say that this is going in the same direction, because the decision to exit any stock should be only below 30-week moving average, because 30-week moving average is a long-term investor's paradise. Whenever a stock goes below 30-week moving average and also the price action is negative, then there is something fishy which is happening with the company, because some many a times the news comes out later, but the price action happens before. So let us look at the next case study, the live case study which is going on, which is Kiri Industries. So Kiri Industries, in fact, I bought it just recently. Look, when the stock broke out about this 7 month, 7 years of consolidation breakout, and from 30-week moving average, we were adding it, but when the breakout happened, I just added more. And this is highest monthly closing after 7 years. And the case why I bought it is because Kiri Industries was going through a litigation in past since past 12 years, and they were about to receive 5,700 crores in their bank after this litigation which would have solved. um, with They were holding a Singapore based entity, and the court decision was in their favor, and ultimately they were going to receive 5,700 crores. The market cap of this company was around 4,000 crores. So cash on balance sheet would be more than the market cap. And that was the simple reason. And along with that, the cash which you would have received to this company, that cash would have invested into the next projects, which is copper plant. Even the plan is going on right now. And this is what even management said. So I had this overview on Kiri Industries. This is what I've been looking at. So I'll share this document on VIP access. You can go through this. 10 years of chronological developments. So what all case which is happening between Kiri and Dystar, and how this company would have got 5,700 crores. And even now the management has confirmed that the funds will be received in the tune of around 5,400 crores after taxation and all. And all these developments is exactly going as per the thesis which I thought. And they also have a plan to set up the copper plant and go towards the big expansion. If this expansion goes through, it will be the second largest copper plant in India. So this all case, I'll be sharing that on VIP access. You can check that later. So this is the development, and because of which I got interested into Kiri Industries and I also bought it. But recently, what has happened is, now let us look at management interview. What management has said about. I learned that
Kiri ChatGPT works
Industries.
best with detailed prompts, but I hate typing them. So instead, I dictate.
We have Manish Kumar Kiri, Chairman and Managing Director of Kiri Industries, now joining us. We'll talk three things: the Dystar stake sale, use of proceeds, and of course, what's in it for shareholders. We'll talk a little bit about business, underlying business, demand, pricing, etc. as we look into 2026. Mr. Kiri, thank you for joining us. Let me start right there. So it's the cash is more than the market cap of the company. The current market cap of the company. So naturally, right, I mean, the question which will come through is, are you planning on giving out a special dividend, something for shareholders?
See, this ended almost after 11 years. So we went through a very murky legal battle in Singapore for more than 11 years now. And when this ended, it ended just on the time where the court decided long stop date in the last enforcement order. So the funds would be deployed all within country. This is our exit from international investment. So the board has decided to invest large part of these funds into rising projects in India. Few have already been announced, and some dividend amount would also the board of the company will deliberate and decide in due course. But you will see from us several announcements to deploy funds for the future growth of the company, where we would be able to translate and transform.
Mr. Kiri, allow me. I'm sure you would understand, right? I mean, shareholders who are watching, and some of them have kind of been with you through the journey as well. First of all of the money in India, this is exit from international operations. Yes, could you give us a broad breakup, and we won't hold you to the numbers since this has just happened. How much are you going to invest in business, and what should the shareholders expect as a one-time sort of dividend?
See, the majority, I would say, based on the earlier discussion, more than 90% would be deployed into futuristic growth projects in India.
Got it.
How much would be the precise number for the dividend? That would depend on the board to decide, but large chunk of money would be invested for the future
90% will be invested, and
more than that.
More than 90% will be invested in futuristic projects, and the rest perhaps will be paid out. I just to get that number out, what is the sort of net of cash on this transaction? What's the tax outgo, if any, on this?
Yes, we would be subject to capital gain tax.
Got it.
And that would be 12.5%. Post that, we will have more than 5,300 crores left post-tax to deploy.
But then you had legal expenses that you have incurred, etc. as well, right? So
X of all of that, what is the net additional benefit that comes to the company? That's what we want to understand.
Yeah, that would be more than 5,200 crore that will come to the
Inclusive of all the expenses, etc. So more than
inclusive of
5,400 crores.
taxes, expenses, everything that relates to that.
All right, so
5,300 or 54?
5,200 plus.
5,200 plus comes in, and of which 4,500 crores goes into deployment of, for capex, and the other 500-600 crores additional will be distributed among shareholders as a one-time dividend. That's correct, right?
Yes, along the line of that.
Along the lines of
Again,
that. And
again, the exit number would be announced soon, but along the line of that.
right, 23% of the promoter shareholding is still pledged. With the dividend that comes in, would the promoters first depledge that as well? We just wanted to understand.
Yes, there was a negative pledge on the promoter shares, not pledge of the promoter shares, to clarify that, but everything would be depledged. There would not be anything pledged.
Okay, and is there any other consideration that is coming to the promoter over and above this 5,200 crore that comes into the company?
Everything comes to the company. There is nothing which flows to promoter at the moment.
All right, and you are completely out of this business from this 37% stake that you subsume. There is nothing else which is left beyond this.
So that's the investment into our international operations. So that would be our exit from our international operations and investment, which relates to dyes and intermediates. So we would be out of that. But the core business, which belongs to India, of Kitty Industries Limited, in the same sector, in the same line, is going to continue.
You said over 90% is going to go into, you said futuristic businesses.
Yeah, the projects, correct. The futuristic projects.
But in the same line of business, you're not looking at new lines of businesses.
No, it would be a new line of businesses. It would not be, it would be diversified investment. If you go through some of the earlier announcements, there were announcements.
Can you quickly outline where will this money go into? I mean,
so there are sectors which are related and unrelated, diversification both. So we decided to put some funds into fertilizer, which is again the need for the country, replacement of our imports, also the metal sector in which we'll be investing into copper, which has already been announced earlier. And that would also be replacing the entirely the import into the country. So we'll be investing into import replacement sectors, but not in the line of dyes and intermediate range of specialty chemicals where we are today. So it could be related as well as unrelated diversification both.
Got it. We should put out that that 90% number. Over 90% will be invested in futuristic businesses. Anything new? You said fertilizer, metals, which is copper. Import substitution is a theme here. These have all been announced in the past, right?
Yes, you will see our disclosures in the past, correct?
Anything new which you where
nothing is new at the moment.
And
we would.
This tool called TopView Agent will completely change the way you create videos. It can generate any scene and effect you want.
What is your internal benchmarking on the return that you're expecting from this 4,600 crore incremental capex that you will do in these new sectors? Because, traditionally in your actual core business, if you invested this money, it would have yielded you a little more because of your expertise. But here you're going on to newer segments where you don't have expertise, but there is opportunity. So what's the kind of asset turns, return on capital, or internal, benchmarks that you have for IRR, etc., for this money?
Right. So last 3 years, the company has been working on strengthening its management bandwidth in the other sectors, and we would be embarking on quite significant large projects. And the IRR of the new investments, which internally the board has approved and what we decided, would be somewhere more than 30% IRR on those projects in which we are investing currently. A return on equity also we are expecting quite significant. It would all be in the interest of shareholders to have at least 3 to 4 years payback on whatever investments are being made currently.
All right, 3 to 4 years payback on whatever are the investments that are being made currently. You are looking to deploy 90% of the 5,200 crore that you get as net proceeds from this into capex, futuristic businesses, import substitution theme. The rest 10% goes into shareholders.
Mr. Kiri, would you? This has been decided. This allocation, etc. This is under deliberation, which has to be approved by the board, or this is your thought process, which is to be taken to the board.
A part of it has already been decided by the board and announced earlier as well.
No.
What
I'm
needs
saying
to be
that
taken to the
90% of
board?
the proceeds will be invested
No,
in.
that's not. This is just a deliberation. I'm sorry.
Okay.
And the board is going to deliberate, discuss, and then decide in the next few days.
Okay, so it's possible. It's possible for minority shareholders who are watching, because I mean, it will be a little, these businesses that you're investing into, that you're thinking of investing into, which will require board approval, and they may do well over a period of time. But those who were expecting for some immediate reward for staying with the company through the years would be, you would understand, disappointed.
Well, I think the feedback that what we are receiving from the investors and the shareholders over a period of last 2-3 years was more optimism to invest into growth areas.
Got it.
And I think that's the willingness of the investors, which and the shareholders, which
But it's possible
was
that,
expressed to us.
yeah, it's possible that when the board meets, you will take this line of thinking to the board and discuss this, right?
And ultimate the board's decision on the deployment.
It's possible you may look at other options on the table
Of
as well.
course.
What we've discussed here today may change. I mean, it's possible.
Right. These are the intentions which I have shared with you, but with the final decision of the board, this may change as well.
Foreign institutional investors hold about 22% stake in your company. The numbers come down from the past, but have you met any shareholders before meeting the board? Or, you said that you've gotten feelers from them that they want you to invest in, futuristic businesses. Have there been any shareholder interactions lately from major shareholders?
There have been interactions with the shareholders, meetings with certain investors over a period of last almost 4 to 5 years, in fact, since this legal battle was going on. And there was also a regular quarterly participation of several of these investors into investors call that we, that we do every quarter. So these are interactions, and besides that, there were other individual interactions with the shareholders and investors, which also took place over a period of last 2 to 3 years. Correct.
Right. Will this require a shareholder vote as well?
Some of them, yes.
Because this is material, right? I mean, you will need to.
Of course. Yes.
Okay. So this board meeting is the next few days, you said, right?
Yes.
Within the next 2 weeks, we should see something.
Yes. Within a short time, you will see something.
Okay. All right. Mr. Kiri, we will connect again, hopefully.
Post the board meet.
Post the board meeting, and we will see if there are any changes from what you said. But I think what you said is important, the last bit, which is this is your thinking. You will have to take it to the board. The board will have to vote on it, and they will have to decide whether this is the course that you're taking. And of course, I mean, after that, maybe there's a shareholder approval, which is required as well. Thank you for joining us. And once again, wishing you a happy and sort of healthy, prosperous 2000.
So here, if you have seen that management had said that the funds will be received to the company, and it will be invested into futuristic businesses, and it is copper plant. So once that copper expansion happens, it will be second largest copper manufacturer in India. And it will be one of the largest value migration stories if it becomes successful. Now, looking at this only, because I've been tracking this company for past more than 10 years now, but and I've been trading into it, but recently got full confidence and conviction when they received that, when they said that the funds close to 5,700 crores will be coming to the company, and I invested into it when there was a cash arbitrage opportunity which was available because cash was more than the market cap. But one thing which has not gone into my favor is the price action. So price action, as of now, the stock price is above 30-week moving average. So as long as the stock price is above 30-week moving average, I'm not worried much. But the thing is, in the last 2 days, just after this announcement, just after this interview was going on the same day, the price started falling down. And after the price started falling down, on the second day also, on Friday, the price fell down. And if you can see here, this is the weekly chart, and there is not so good price action formation because the even after the monthly breakout, the weekly breakout didn't happen. And volumes which happened last week was highest ever weekly volumes, but the price is still above 30-week moving average. So the cause of concern for me will come when the price goes below 30-week moving average, because if all these developments are happened, and as I said that 30-week moving average is like long-term investors zone above which the long-term investors start building the positions. But if all these developments are there, the price should not go below 30-week moving average in any case. Because if the price is moving below 30-week moving average, which means some of the insiders know that there is something fishy. Because it is, you must understand that 5,700 crores is not a small amount. If something like Lille Electrical happens, I hope that nothing of that happens. But if something like Lille Electrical happens, and even before that, market will sense that. Market is like a intelligent animal, and market will sense that it is a collective wisdom. If the price goes below 30-week moving average, I'll be looking at aggressive risk management. Because saving the capital is at most important. And connecting the dots, I've told earlier 3 case studies how I saved my capital from a big blunder to happen. It is okay to take some hit of 20-22% than losing the entire capital. So this is the live case study which is happening as of now. There is not much concern as long as the 30-week moving average is not breached. But if 30-week moving average is breached, then there is big fishy with this company. Big thing which is fishy with this company. Maybe the funds might not come to the company. Maybe some siphon out might happen, and maybe any bad thing can happen. So this is the live case study which is happening, and if the next week onwards after this board meeting, if the price starts moving upwards, there is no worry. But if it stagnates here and starts flowing down below 30-week moving average, it will be a big worry. Then any bad, so even before the bad news comes out, the price will start reacting. So this is the live case study which you should look at what exactly is happening and how we can navigate these times during the most uncertain times. Because when the management himself has promoter himself has came on TV and said that 5,700 crores is coming to the company, and if it other things happens, then it is not a good sign. So this is the live case study which is happening, which we will see in front of our eyes, whether it will be a successful or a big blunder is waiting to happen. So this is how you need to take the decisions in the long-term investing holdings at risk management, and that is what I wanted to share with you. Now let us look at Strategic Alpha's weekly roundup. This is 2nd January 2026. Now let us look at frontline indices. India VIX closed at 9.45. It was up 3.3%. Nifty 50 index was up 1.1%. Nifty Mid Cap 100 was up 1.74%. Nifty Small Cap 250 Index was up 1%. Nifty Public Sector Enterprise was up 3.8%. Nifty Metal Index was up 5.7%. PSU Bank was up 5%. Nifty Commodities was up 4.3%. Nifty Auto was up 3.8%. And Nifty Public Sector Enterprise was up 3.8%. Within the metals, lithium was up 16%, iron ore was up 1.8%, methanol and crude oil, all these commodities were up. There is one development regarding crude oil is US has attacked Venezuela, so which can take the crude price higher from here. Now let us look at other commodities performance. Rhodium 15% up, nickel 7% up, aluminum 2.44% up. We track around 70 plus commodities because whatever we do, commodities is at the core. Uh, then we get to understand more about the equity cycle when we understand the commodity cycle. So news which matters the most. So US airstrikes on Venezuela. Center likely to cut debt to GDP to around 55% in FY 2027. Manufacturing growth cools to 24-month low of 55 in December as export momentum weakens. So strategic alphas, FTVT framework, commodities, metals, commodity stocks. This is the sectors. Even now the auto sector is qualifying the FTVT. And the factors which shall be dominant going forward and even dominant from the time which we have talked about it is value. So value should make the maximum money. In the factor rotation session, we have clearly explained about what factor rotation is and why it is important for an investor to understand how factor rotation happens. Now let us look at Nifty. So Nifty has done a new lifetime high close on a weekly basis. So a lot of consolidation was happening from many weeks, but last week Nifty has made a new lifetime high. But Nifty 50 equal weight is yet to make a new lifetime high, which means that Nifty 50 is not a true representation of Indian markets. It is because it is a skewed index. So unless and until Nifty 50 equal weight index gives a breakout, it will not give us the full confidence that the bull market has started. So as of now, the early signs are there from Nifty 50, but Nifty 50, as I said, it is a skewed index with few companies amounting to big allocation. But Nifty 50 equal weight index will give us the clear confirmation and confidence that the fresh and new bull market has started. So this is the index which we'll be looking in next few weeks, 1 or 2 weeks. If this breakout happens here, maybe next week, there will be a clear-cut confirmation of a fresh bull market start. So this is Nifty 50 equal weight versus Nifty 50. That is also at a point where we need a breakout above this zone. That is the time where the fresh bull market might start. So as of now, it is consolidating and it has not yet broken out. So we'll watch this for more confirmation and confidence. This is one more chart, Nifty 500 equal weight versus Nifty 500. So this is at a juncture where breakout has not yet happened. It is very closer to the breakout. Maybe next week, if we see a rise here, it will be confirming the breakout. If this breakout is confirmed, then it will be a sign that the fresh bull market has started. So I've talked about broader market cycle that there are initial signs. I posted about it on VIP Access also. There are initial signs that the broader market might start outperforming. And even today, there are initial signs, nothing much confirmed, but the pattern is saying that can the broader market starts outperforming again? And when I say broader markets, I don't mean small caps. I'm clear about the small caps. Our small caps are still at alpha losing cycle. And even if small caps outperform, they're not the best place to be. I've been posting about it. Why it is not the best place to be? Because the valuations are not cheap. So, what is the best place to be? We'll be talking about it at a later stage. But the broader market, there are initial signs that the broader market might start outperforming. Maybe when Nifty 50 equal weight index gives a breakout, decisive breakout, that is the time we'll get a clear confirmation. But as of now, there are initial signs. This is one more chart, Nifty 500 equal weight versus Nifty equal weight. Can broader market outperformance starts from here? Very initial signs. We need to check that in next 1 or 2 weeks. So I've been talking about it that even if the broader market starts outperforming, don't think that small cap will also is also at a good place. Why I'm saying so? Broader market also has small caps, but I'm bullish on broader markets X small caps, leaving the small caps aside. The reason is valuations are not comfortable in small caps. But when the broader market outperforms, what are the themes which can do better than the small caps? So the large cap value. So large cap stock, but value stocks are outperforming small cap indices for the past 6 months. This is a ratio chart of Nifty 200 value 30 versus small cap. And for the past 6 months, if the ratio is moving up, which means that large cap value stocks are doing much better than the small caps, and it can continue to do well. So the clear signs are there that the large cap value stocks will do better than small caps. Then why we need to touch small caps? 6 months when the small caps were falling, large cap value stocks were outperforming. So even going forward, there will be clear signs that large cap value is at an inflection point and they are placed much better than the small cap. So this is one more chart of precious metals. Here you can see gold plus silver, which means precious metals divided by Dolex. So gold and silver in dollar terms divided by Nifty Sensex in dollar terms. Sensex is dollar terms is nothing but Dolex 200. So this is the ratio chart and which tells us that when the ratio was low, it was good to invest in precious metals. When the ratio has moved up high, it is good to invest in equities. That is what the data says. That is what the chart says. So whenever the ratio has moved up to this zone, after that, equities have started outperforming the precious metals. So at this point of time, the question arises, is this time the different? If this time is not different, because earlier whenever the ratio has touched these zones, precious metals have either moved sideways or have fallen and equities have started outperforming. So but is this time the different? And if it is not, then Indian equities is the best place to be compared to precious metals. A lot of people are chasing precious metals now, but I think the outperformance for Indian equities can start against the precious metals. And if we get a red candle here again, it will be a clear sign that Indian equities is the best place to be. Indian equities is the best place to be compared to precious metals. So, as I said, that Nifty has given a breakout. Broader market means Nifty 500 or Nifty 50 equal weight has not yet given a breakout. But if that breakout happens, the fresh bull market start is getting confirmed. But there are early signs from the Nifty. And one more early signs is happening from the market breadth. So market breadth, if you have seen earlier, the percentage of stocks trading above 30-week moving average, they were constantly falling down for large cap, mid cap, and small cap. Small cap hitting the worst, mid cap hitting the worst, and small cap also than the large cap. But recently, in past few weeks, that number of percentage of stocks trading above 30-week moving average, they have started going up. So there is a reversal seen in the market breadth. So the stocks which were going down, now they have started coming up. And this is stage analysis. Stage 2 means the stocks which are in uptrend, and stage 4 are the stocks which are in downtrend. So the stocks which are in downtrend were increasing from September to until recently, but in past 1 month or so, the number of stocks which are in downtrend, they are getting reduced, and there is a lower top, lower bottom formation you can see here. And at the same time, the number of stocks which are in uptrend, they are increasing. Here also you can see a trend is on a higher side, which means market breadth has started improving. There are initial signs. If a breakout is confirmed on Nifty 50 equal weight index, it will be a clear sign, because there are initial signs from the stage analysis. It will be a clear sign that the fresh bull market had started. So sector-wise, Nifty 500 close to 52-week highs. Metal and mining is the strongest sector from all those sectors. Then there is bank, then there is telecom, then there is auto. So these are the stocks, these are the sectors which are the strongest. And when the fresh bull market starts, there is high chance, there is high probability that these sectors will also continue to do good going forward also. So here you can see number of stocks about 200-day exponential moving average. 200-day exponential moving average is once again the key barometer for long-term investor. And if this ratio is also reversing, which means market breadth is getting improved in past few weeks and months. So percentage of the stocks about 20-day, 50-day, and 200-day exponential moving average, this is a crossover. This is a positive crossover where the stocks about 200-day exponential moving average and the stocks above 50-day exponential moving average, they have crossed over, which means that the fresh bull market can start if the decisive breakout happens. So these are clear initial signs. So percentage stocks, indices percentage away from 30-week moving average. So Nifty Metal is the strongest. From 30-week moving average, it has moved 13.73%. PSU Bank next. Then there is Auto, Nifty Auto. Then there is commodities. So these are the strongest sectors which can do good if the breakout happens. This is the area to be focused. Now let us look at, so in that there was auto index already. And why auto index? Even in the previous sessions, we have discussed about it. Once again, let me discuss. Last week, there is a clean decisive breakout on auto index. So auto bull market has already started. For confirmation, one can wait for Nifty 50 equal weight index to break out. But auto index is clearly in a bull run. It has given a breakout. So auto index, apart from that, earlier we said that narrow bull run is happening. Nifty Metal is into bull run, and Nifty PSU Bank is already in a bull run. Now auto index is already has already also joined the bull run theme, and auto index is now started a new bull run, and the momentum can continue. If this is a ratio chart of Nifty Auto versus Nifty, once again, if this continuation happens, like let us say next week, where the auto index once again moves up, it will be a breakout above this also. So if this breakout happens, it will be a clear sign that the strong momentum in auto index shall continue. One more sign is about Nifty Metal Index. I had said about it that Nifty Metal is already in a bull run, but a bull run and how strong the bull run shall be, it is dependent on this ratio. So this is Nifty Metal versus CNX 500, and this ratio is consolidating in the range for the past 1433 days, more than 1500 days from 2021 to till now. If this ratio gives a breakout here, which means metal and mining stocks, some of the metal and mining stocks can turn multi-bagger also. Some of the metal and mining stocks are already up 40-50% in past 1-2 months, and they can turn multi-bagger, which means the sector itself is at a stage where it can turn multi-bagger if this breakout happens. Which means if this breakout happens, the minimum period which of the outperformance against market shall be around 455 days, which means around 1.5 years. So 1.5 years, metal index, can it remain a top leader sector? This confirmation will come in some time when this breakout happens. Maybe by the mid of this month, maybe that confirmation might come. And within the commodity stocks, metal and mining stocks should do much better. Why I'm saying so? This is the ratio chart of Nifty Metal versus Nifty Commodities. And this ratio has given a breakout after how many years? This is 2014 and 2025 just closed, which means this breakout is happening after 11 years. And in the metal and mining session, we have discussed clearly why the money should flow into metal and mining sector. If this breakout is happening after 11 years, you can think what can happen with the metal and mining stocks over the next 3 months, 6 months, or even a year. Along with that, we also need a breakout on that ratio, which I said earlier. But this is a monitorable and I'm monitoring it. But as of now, it is clear that metal and mining stocks can do extremely well. This is Nifty 500 value 50 versus Nifty 50 equal weight. Why I'm saying so, and I'm going aggressive on value theme, even than the small cap, is because when I'm choosing Nifty 500 value 50, which means large cap value stocks. The large cap value stocks like Coal India, Steel Authority. So these are large cap value stocks. ONGC, such kind of stocks, even Oil India Limited. So these are large cap value stocks which can do much better than the small caps. So this is Nifty 500 value 50 versus Nifty 50 equal weight. Nothing should be taken as a recommendation. I'm just sharing this as a cases when I'm taking stock names. Please note that. And this breakout has happened after a long time, which means value theme. Is it going to be a winning theme going ahead also? I think so. So this is one more chart is about S&P Dolex 200 versus S&P 500. So if you look at the ratio closely, in 2007, when the ratio hit this zone, from then the Indian markets outperformed the US markets. Even from 2013 to 2015, when this ratio hit this zone, Indian markets outperformed the US markets. Once again in 2020, when it hit this zone, Indian markets outperformed the US markets. And once again, we are at this critical juncture. If we get a breakout here, maybe 1 month or 2 month, maybe whenever that happens, I'm closely monitoring it. It will be a clear sign that the Indian markets can do much better than the US market. US markets are already super expensive compared to even India. So there are high chance, and even dollar index is clearly saying that if dollar index moves southwards, there is high chance that capital might rotate out of US into emerging markets. And emerging markets, it is also contains China, it also contains India and other emerging markets. So in that case, this ratio might turn up, which means that Indian markets will be confirming the outperformance against S&P 500. So, but for that confirmation, we need a big bullish candle here. maybe 1 month or so, we might get that confirmation. So one sector which can turn out to be dark horse. I've been talking about some 3 months back. I told that metal index can turn out to be a dark horse. PSU bank index can turn out to be a dark horse, and they already turned as dark horse. They're already performing like a dark horse. But one more sector which one should study at this point of time, which is heavily beaten down and can give time to study, maybe 10 days, is reality. Reality stocks are at a stage where metal stocks were maybe 3 4 months back. But this is for study, not I'm saying from the price movement perspective, because if for this reality sector to do well, we need a confirmed breakout on Nifty 50 equal weight index. But before that, it will give enough time for anyone to study reality sector. But because the stocks are beaten down, and whenever the stocks moves above 200 exponential moving average, that is the time it will confirm for a long-term investor that the moves can come in the reality sector. But this is a sector to be studied in deep. When Nifty equal weight index gives a breakout, reality index can start heavily outperforming. When to come back to small caps with conviction? I've been saying about it that small caps are not the best place to be. Because why do we need small cap when there are better alternatives available? Even during the silver session, I said that what people want the small cap to give returns, the same returns can be achieved by silver. So why chase small cap? And it exactly happened that way in past 6 8 months or 9 months. Silver went up 2x and small caps went down 10%. So when some of the asset, there is a bull market going on in some part of the world, some part of the asset, some part of the country, some part of the factor, or some part of the sector. And if we are able to find that, uh, we'll have the evergreen portfolio. So small caps are not the best place to be. Why I'm saying so? Because the price to book, which I personally want, is around 2 times or 2.5 times or even 3 times. That is the time when I'll go heavy on small caps. But even today, the small cap price to book is around 3.8. So for me to go heavy on small caps, I need this ratio touching here and also the price to book at around 3 times. If that happens, uh, I can go heavy on small caps. I've been talking about it that we are in a precious metal bull run at least till 2028. If you have not gone through the commodity bull run session, do go through it. I've explained that in detail. But even though if we are in commodity bull run till 2028, precious metal bull run till 2028, there can be smaller sideways time corrections, price corrections, or consolidations. So as of now, I don't think precious metal is the best place to be because I can continue doing SIP in precious metals. But if I want to generate alpha, I don't think precious metals can give us alpha at this point of time. Maybe in very near term, 3 6 months. There are better asset classes at this point of time than precious metals because precious metals has done extremely well in past 9 months already. So when the money has been made already, I think one should look at the next outperforming sector, factor, or asset. So I can keep on doing the SIP, but I'll utilize the capital better if I already made money. This is Global 30 Crypto Index. So Global Crypto 30 Crypto Index is at a important support, and this warrants study at this point of time on Global Crypto Index because the fresh money printing has started by various governments, and crypto is the best asset class to play the money printing game. Whenever the money printing happens, cryptos does well. So one should look at it. I've been saying about it that I've invested into cryptos not more than 5% of the portfolios. It is not about being right or wrong. Even if cryptos goes down 50-80% from here, down here, I'm least worried because I already followed the asset allocation risk management. I'll not be adding cryptos unless and until it starts outperforming the gold. Because gold versus cryptos, there is an inverse correlation. Whenever the gold performs and crypto starts outperforming, that is the time crypto can win over the gold. But as of now, it is telling us that cryptos are at an important support, but it has not yet started its outperformance against the gold. Yes, there are initial signs. This is Bitcoin versus gold. Last week, there was a bullish engulfing when gold fell down, Bitcoin didn't fell. So one thing has happened. When the gold fell down, Bitcoin didn't fell. Now let us say if the gold goes sideways and Bitcoin goes up, that will be another confirmation. So initial signs of outperformance has came in last week, but I'll be only confident on Bitcoin against gold only when it crosses this black line. If it crosses this black line, that will be a full and confirmation. 1 week is happened, maybe 1 or 2 weeks more. If it continuously outperforms, it will give me more confidence compared to gold. So this was all about this week's weekly community connect. Hope this session was helpful. At first, we discussed about 3 case studies, how to take crucial decisions when management is also coming on TV and saying that everything is right, but how price action and connecting the dots can help you take decisions. Because even in the case of Yes Bank, it happened, and that case I forgot to mention here. Even before the big mishap happened in Yes Bank, connecting the dots, I was out of Yes Bank well before the bad development happened. So Mr. Rana came on TV and said that I will not sell my single share in Yes Bank because my shares are like diamonds. That is the statement which he used. When management comes on TV after a bad price action and says that everything is right, and still the stock keeps on going down, which means something is fishy. As of now, I'm not worried into Kiri Industries as long as it is about 30-week moving average, but I am monitoring the developments very closely. So this was a learning for you all, that how to navigate during the tough times when there is most uncertain times, and be ahead of the game and take risk management decisions. So thank you everyone for joining in. Don't forget to follow us on our social media handles for the dose of knowledge, wisdom, and ideas. We are available on Facebook, YouTube, Instagram, Twitter. My Twitter handle is Suyog_Dhawan. And Strategic Alpha VIP Access. If you are not a part of VIP Access yet, do be a part of VIP Access. I share my learnings over there. Also, I'll be taking this dot connecting workshop. How do I connect the dots on tech? It is called as Techno Value Investing, FTVT analysis. Do register for that whenever it will be happening. Maybe soon after the symposium, I'll be taking that. Also, don't miss 2026 symposium if you are serious about commodity bull run. So thank you everyone for joining in. I'm just ending this session.